In today's video, I want to introduce a powerful indicator on TradingView that is very useful in trading. To add this amazing indicator to our chart, here we click on indicators and we search triple confirmation kernel regression overlay. This one, which is written by Quantra AI. Alright, this is the indicator, and as you can see is overlaid on the price chart. This is an advanced indicator that is built based on kernel regression, and it helps you with trend directions and dynamic overbought and oversold zones. This middle line here, which is in gray color, is the mean or average. And this line, which between the line and price is filled with purple and green color, is a signal line. In times that the price is above the mean, it's considered to be advancing, and at times that the price is below the mean, it's considered to be declining. But being above or below the mean doesn't necessarily mean advancing or declining, and you can have the price above or below the mean but just in a flat form. So the safest interpretation would be to say when the price is above the mean, we have greater upside momentum, and when the price is below the mean, we have greater downside momentum. And for the signal line, it's an earlier signal in compared to center line crossover, and depending on the color you can realize if there is increased upside momentum or downside momentum. When it turns to green, it tells us that we have increased upside momentum, so advancing of the price is expected, and when it turns to purple, it tells us that we have increased downside momentum, so declining of the price is expected. Above and below the center line, we have these two lines. These two lines are one standard deviation from the mean, and these two lines are two standard deviation from the mean. In times that the price reaches to this level or goes beyond that, it's considered overbought, and in times that the price reaches to this level or goes beyond that, it's considered oversold. So when we have the price in these zones, two things can happen. We can have an instant reversal of the price and having the price back around the mean or below that if the pressure is high, or in another situation, we can have the momentum slow down before either reversal or further declining of the price in the prior direction. So when the price reaches to these zones, we know that the price is gonna pause there. So these zones are useful for setting your targets. For example, consider you are in an open long position here. So you know that when the price reaches to this zone, it's gonna stop here because it's overbought. So you can close your position and take your profit. Or consider you are in an open short position here. When the price reaches to this zone, you know it's oversold and the price is gonna pause here, so you can cut your risk and close your position. Besides this, you can also use these signals for entering a trade, but you need to know in what cases you have higher probability for instant reversals like this one, and filter the ones like this one that have higher probability to develop to a flat market. To have a better analysis of this indicator, it's better to set your chart type on Heikin Ashi candles, so the noises will be removed and you can have a more clear picture of the market. And for this purpose, you must also go to the settings of this indicator and remove bar color here in the style tab, so you will have a clear picture of the market. And for confirmation of reversals, we can add another indicator, for example awesome oscillator, this one. And by the help of this indicator in conjunction with Heikin Ashi candles, we will be able to take the signals that have higher probability of reversal. When the price reaches to overbought zone, in this situation the awesome oscillator is usually green, and we wait until it turns to red, and when it turned to red here, the closing candle should be red. It should not be a doji, and the candle should have body, because if it's a doji, it shows indecision in the market and we have higher probability for flat market. When we have all these conditions, we have high probability for the price to reverse back to its mean or below the mean if the pressure is high. And on the other hand, when the price reaches to this zone, we go to awesome oscillator and we wait until it turns to green. In this situation, the closed candle should be green and it should not be a doji. In this case, you can see that it's a doji. We have consecutive dojis, and this shows indecision and possibility of having flat market. This was just one way of picking the probable signals for reversal, and another way could be having RSI on our chart, this one, relative strength index, and mix the overbought and oversold readings of this indicator with RSI divergence. For example, here you can see that RSI is showing bearish divergence, and this signal mixed with this signal, which is showing overbought zone, it gives us the possibility of reversal. But for example, here we don't have any divergence signal from RSI. This was just another example of how you can use this overbought and oversold signals in practice, and there is no limitation on how you can use this indicator, and you can use it in conjunction with any other reversal strategy, so you can further confirm your trading decisions. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.